Hey everybody, this is Paul. Just making a quick video here on a Saturday. Um, just want to give a quick update of any position moves that I've had, anything that's changed in my portfolio and the reasons why, and just different opinions I have on just different things going on in the market. Um, so minor moves that I've made, DFS, pulled out 5 shares, um, or pulled out a few shares since the last time I did my last video. Main reasoning for that is just the dividend yield is kind of not that great as the share price has risen. So 1.87 on something I believe has kind of topped out for the moment, which is actually kind of surprising considering by all indications we're still technically in a recession. Um, so I decided to take some profits on this. The reason why it's after the first of the year, so any tax implications, capital gains taxes from this will be after next year. So that's one reason why I just take some profits off the top, put it to work somewhere else. I also pulled a little bit out of O just to free up some capital. Even though I do technically expect O to go back um, to, if you go back over here, you see it was trading at 82. Um, this little ride up that it's done, and it's just basically traded flat. I actually do expect O to actually go back up to here once we recover. But the problem is that O is in pretty much anything that has the word dividend in it, ETF wise, has O in it, and especially anything that has REITs in it. Even though O really only rents to really stable clients, they're caught up in this whole office, like this commercial property thing going on right now because everybody's working from home. But O really only rents to like Walmart and Walgreens, that kind of stuff. So it's really, really stupid. But O has been caught up in that. So at most, I pulled maybe like 4 shares out just to free up some capital and put it to work somewhere else. Uh, um, just saying, just basically, I reinvested the money into some utilities, say like Duke, Southern Company, that type of thing. Um, also had like a different check come in for my actual work, my earned income that I invested, um, that I put in. I think it was like say $300 or so. So total right now 51,818. Um, but whenever I put my YouTube titles, I'll normally put this number. So um, had a down day on Friday. One little thing I did start doing, just kind of for the laughs, not really for the laughs. Actually, this is one stock that I do think is going to come back. Um, they are still paying. Are they paying a dividend? Yeah, they're still paying a dividend, even though I don't even think they're paying a dividend anymore. But I did throw some money into AMC. You might be asking me why I did not throw money into GameStop. That is basically a speculation rally right now. Like it's basically speculative, um, and I'm not too sure how I feel about that. Um, I think it's kind of run as far as it's going to go. Although if you go to our favorite site here, Wall Street Bets, um, I mean this guy's paying off his student loans with the amount of money he's got make playing options on this stuff. Um, I get what they're going for. They're kind of fighting against like really big short funds and that kind of thing. It might run further. I prefer to kind of. I played safer. These guys would actually make fun of me if they saw my portfolio. But I threw it in AMC. It's pretty obvious that I have a feeling that once COVID and you get enough vaccinations going on. So right now in Louisiana, for example, they're doing a 65 and older. Once they get done with that population, which is really large, they're going to start moving down into the 50 to 65 area, essential workers, that kind of things. Once you start vaccinating just large segments of your population, especially like grocery store workers, that's 4 million people, at least in Louisiana. Well, it's not 4 million, it's about 2 million people in Louisiana that are just going to be in this window right here. Because right now we're still in the 65 and older range. But once you get past that and you start getting into like grocery store workers, that type of thing, those are the people that are going to be like, okay, well, I can go out again. So you might actually see kind of like a little bit of a reopening of the economy. And a lot of people are estimating, especially if you listen to Biden, 100 million in 100 days. That's technically one third of the U.S. population. So you should start to see the COVID numbers start to go down dramatically, I would hope, pretty soon, as you get way, way more vaccines out and a better rollout for mass quantities. So right now, so this is an example of one. So GameStop was an example of one of those ones that was trading at almost nothing, and then all of a sudden you just had just a massive amount of people rush into it, um, as they expect to kind of like a turnaround of the company. I am kind of expecting the same thing of AMC. They're one of the movie theaters I think will come out on the other side of this. Normally, I have not made these kind of plays, especially last year. I never made these kind of plays before the vaccine came out and actually got rolled out. Like the people that invested in Carnival, that kind of thing. Um, so you're not going to see any Carnival in here, any of that kind of stuff. It's going to be mostly stocks people have been able to buy right now, or products that people have been able to buy right now and actually use during this entire lockdown. So like Intel, Apple, that kind of stuff. Um, and globally diversified companies like Caterpillar, that type of thing. Um, so right now, just basically AMC is just one that I'm kind of safe making a bet on. I can also grab 100 shares for $300 and then make a quick 4.62% gain. That's actually a lot if you really think about it. Um, if I invested say 3,000 in here, 4.62 on $3,000. That's actually a lot of money. This one right here, before it actually has fundamental like earnings reasons to go back up, I have a feeling there's going to be another stimulus that they'll capitalize from, because they're just one of those businesses that want to keep people employed, and they're also just zero interest rates. I have a feeling there's just going to be a little speculative run into this. Some people are saying it might get up to $7. It could actually run further than that. I mean, where I'm at right now, I'll probably just end up holding these shares. And it also is actually, it used to be a dividend company. I think it still is, but I'll just hold it just because of that. Um, I might sell off like 25 shares at some point once I get like, some stupid amount of money saved in here. But it kind of reminds me of Discover, where it's just one of the ones that people are still using. It's just they don't have the earnings right now. But in you know, I could maybe jump into an airline, but I just never have really jumped into airlines. They're really, really slammed, and that's going to take longer to come back. I have a feeling that once people can actually go to a movie theater, they're going to go to a movie theater. People are really, really stressed out right now and want to get out of the house to do something. Um, people want to have like date nights outside of their house, so that's kind of one of the reasons I jumped into there. Other stocks I could see myself jumping into. So first thing I look at is percent of my portfolio, how much money I have invested in a certain section. Second thing I look at is dividend yield. That's sustainable. And then also the other thing I look at is price to earnings. I still look at price to earnings, even though barely anybody's looking at that anymore. So one place that I actually did buy shares at was actually IBM. Where's it at down here? Where's that IBM? So last time you saw it, so if you notice, I actually originally bought all my shares for IBM when it was at 130. It just dropped down to 117. This is one of those ones that's just going to be around, and they pay just a stupid high dividend. So I actually took a good bit of the DFS money, took say 500, I believe, and dropped it into IBM when they had that big downturn on Friday after they reported. They didn't miss by their earnings on much at all. So this is one of those ones that I think could easily have a turnaround. And they also have close to a 5% dividend. It's a pretty easy one to buy. I don't think they're going to turn into Apple or anything, but I think there's easy ways to fix what's wrong with this company. Um, Intel's another one of those ones where I think there's easy ways to fix what's going on with these companies. Um, are there any new companies I want to add? No. Um, Not that I can see. If you listen to these guys, you would load up on GameStop. Yeah, some see $4 million returns. Um, you would load up on like say GameStop, BlackBerry, Palantir. Um, just I'm not that kind of investor. It's just not my thing. But I could see why they want to load up on them because they want to ride that speculative frenzy. And with zero rates right now, margin is easy to come by. So margin is just as easy. If I wanted to open a margin account right now, literally double the number that you see on the title of a YouTube video, I would literally just go to margin, hit yes, and just double up on that number. So all of a sudden I'd look like a genius with an $86,000 portfolio. In reality, I would basically be having margin and then a loan I got to pay every month. I think E-Trade charges like 11%, which is ridiculous because the interest rates right now are zero. But they try to, that's their way of discouraging margin. Um, I'm not a big fan of it. So places I can see loading up next. Um, I believe I could load up on, or where I could see myself just adding stocks. Um, like say if I had like $1,000, I know where would I put it? Coke, easy. There's pretty easy, obvious answer. This is another of the, if you want to call it the COVID recovery plays. If you notice, it was trading at 52. See, it's at 48 now. Um, Basically, if you take it back, you know, it's obviously traded above 60 before. It was well on its way. You see right here, once people get the vaccine, stadiums start open. So basically, right now, I'm doing the vaccine play um, of where to put money at. Like, would I put further money into J.P. Morgan? So if you go out to J.P. Morgan, you go out to here, they've pretty much recovered to where they were. You see how this kind of works? Um, I'm looking at stocks to see if they have recovered to their previous positions. So even looking at these guys, 3M for example, previously they were at 225. Could I see adding there? Yeah, easily. Um, but one of my primary focuses right now would probably be something like Coke, especially if I could catch Coke at $48. I have a feeling it could run the 60 pretty easily. Um, but right now I'm just kind of bouncing around, just trying to see if there's anything out there. Just see if there's Cisco, maybe for example. Previously traded at 56. They've hit a rough patch, obviously. They've recovered a little bit, to their pre-2020 drop, but you know, could they come out of this stronger? Yeah, easily. Like DFS, for example, that's the 1 year. You know, this is why I pulled money out of DFS. Their dividend yield is low. I've already made bank on DFS, and they've previously traded in this. It actually looks weird. I don't know why it says it's above 140, but yeah, that's weird. But yeah, it's just one of those ones I've made bank on, so it's easy money to pull out. I'll take the tax hit at the end of the year. I don't care. Um, there's just different things. It's so obvious. Like once stadiums reopen, um, Pepsi, for example, has already recovered because they're more diversified into like that chips and that kind of stuff. Just different business units, but I could easily see Coke recovering. The only place I would think maybe to pull out money any further, maybe Apple, but I don't know how I feel about Apple. I have a small position in it, so I'm actually willing to ride this one. Normally, if I had a very small position in Apple, say like $500 or something, I would have pulled it all out by now. This little bit right here got a quick 8% gain. How much further can Apple run? You never know. It's already probably close to $2 trillion valuation, going up to three. Um, so that's pretty much what we got going on. So right now, it's just kind of focusing on dividend yield. This is kind of where we're at right now. February has a few payouts. March is obviously the big payout month. This is back over 200. I might focus on some of these intra months. I might add maybe Verizon. I could easily see adding Verizon because if Biden gets an infrastructure bill through, that's a 5G rollout. They're going to do that through the private companies. So you can see something like T-Mobile, Verizon really benefiting from that. Also, if 5G gets really rolled out, Apple really, really benefits from that. Samsung benefits for that if you're into Korean stocks. Um, but so that's what March looks like, and then this is what February looks like for me right now. So right now I'm just trying to add different positions. So I don't know. If you have any questions, just leave them in the comment section. I'll be happy to answer. Thank you.